Good morning, all. I'm Dr. Amrita Tiwari from SGI, a SAGE group of institutions from MBA department, and I want to today lecture based on the topic is cost accounting. I want to overview the cost accounting in this slide, and we will start from the beginning. And after that, what is the cost accounting? Cost accounting is the branch of accounting that focus on analyze the recording and reporting the cost incurred by the company in its production, process, operation, and activities. It involves the collection, measurement, assignment, control, and analysis of the cost to help management to make informed decision and improved cost efficiency. Cost accounting is related to the cost of operation, productions, and other business expenses and provide the management with the informations of the business profitability. The primary objective of the cost accounting is to provide the accurate and relevant informations about the a cost is providing goods or services. The information used basis such of various purpose such as the cost measurement and control. Cost accounting help in the tracking and control the cost at different stages of the productions. It involves the identifications and classifications of the cost, determining cost drives, analyzing cost behavior to understand the cost structure of the organization. Cost planning and budgeting. Cost accounts assist in the formulation of the budgets by providing cost estimates and the projections. They help management set cost targets. Allocation resources efficiency in monitoring actual cost against budget amounts. The production pricing and profitability analysis. Cost accounting help in determining the selling prices of the production or services by the considering various factors such as production cost, market condition, desired profit margin. It also enables to the analyze the profitability at a product, customer, or market segment level. Decision making. Cost accounting provide the crucial information for the decision making, such as make or buy decision, pricing decisions, production mix decisions, and the investment decisions. By analyzing costs and their impact on the revenue, management can make informed choice to optimize the profitability and resource allocation. Performance evolution. Cost accounting plays a significant role of the evaluating the performance of different departments, decisions, or business unit within an organization by comparing actual cost against the standard cost or budget. Cost accounting is application on the accounting and costing principle, method and techniques in the certain of the cost and analysis of savings or excess cost incurred as a compared with the previous experience or with standards. Cost accounting is a very wide term, a very wide term. It means they include the principles, techniques, and systems which are employed in the business to plan and control the utilization of the resources. Identified excess cost, estimation less cost, material waste, such material built on the lower price. Material plus labor plus overheads expense is equal to cost. The difference between the cost accounting and the financial accounting objective. It provides the information about the financial performance, financial positions of the business. Cost accounting, it provides information of the uncertainty of the cost to control cost and for the decision making about the cost. Nature, it classifies the records, present and interpret transaction in terms of the money. It classifies the record, represent and interpret in significant manner of the material, labor and overheads cost. Recording of data. It records historical data. It also records present the estimated budgeted data. It makes use the both historical cost and predetermined cost. Users of technology. The users of financial accounting statement are shareholders, creditors, financial analysts, and government. And the cost accounting informations is used to internal management and different level. Analysis of the cost and profit. It shows the profit and loss of the organization. Cost accounting provide a detail of cost and profit of each product, process and job contract. Time period. Financial statement are the prepare for the defined period, usually a year. It report statement are prepared and the when required. Presentations of the information. A SAT format is used for the presenting financial information, and there is not set in format for the presenting cost information. Types of transactions recorded. Financial accounting records only external transactions like sales purchase receipt. The cost accounting records not only external transactions but also internal and interdepartmental transactions like the issue of material by storekeeping to production. The elements of the cost in cost accounting can be classified into three main categories. Material cost. Material cost include the direct, indirect expense associated with the acquiring and using the material in the production process. Direct material cost refers to the actual cost of the raw material used to manufacturing of the productions. Indirect material cost material, consumable items or the supply that not directly identifications with any specific product but are necessary for the production such as cleaning agents and small tools. Labor cost, if the labor cost are expense related to the workforce involved in the production process. They include wages, salaries, benefits and incentives paid to the direct and indirect. Direct labor costs are associated with the employees directly involved in the manufacturing or provide service such as machine operators or assembly line workers. Indirect labor cost include salary or wages in the employees who support the production process and indirect such as supervisions, quality control. Overhead cost. Overhead cost, also known as indirect cost, are expense that are not directly attributed to a specific product or service but are incurred to support the overall operations of the business. These costs include rent, service, depreciation, insurance, property tax, maintenance, and repair. And overhead costs are typically allocated to products or service using various allocation methods such as direct labor, hours, and machine. And then, we will discussed about the elements of costing. Elements of costing. There will be elements of costing. Classification of the costing basically is the by the function direct cost and indirect cost. Direct cost can be directly traced to a specific product, service, or cost object. They include direct material and direct labor cost. And the indirect cost in the indirect cost are not directly organized within a specific product or cost object. They are typically allocate cost objects using the cost allocation methods. Depreciation of machinery, insurance, lighting, power, rent, material, and salaries. By behavior, fixed cost. These costs remain constant in the total amount over a specific range of activity for a specified period of time. These do not increase or decrease when the volume of the production changes. For example, building rent and managerial salaries remain constant and not change with change of the output level, and thus the fixed cost. Rent and lease material, managerial salaries, building insurance salaries, manipulation. Fixed cost. Fixed costs are expense that remain constant is the level of productions or sales. These costs do not change in the short term. And even these changes in the volume of output or sales. Example of fixed cost include rent, salaries, insurance premium, and the property tax. And the variable cost, a corporate expense that changes in the proportion how to company produce or sales. Variable cost increase or decrease depending on the company productions or sale volume. They rise the production increase and fall as the production decrease. Total cost is equal to fixed cost plus variable cost. So what is the variable cost? Variable cost explains the change in the proportionally is the level of productions or sales. Their volume, output, sales increase or decrease. Example, the raw material cost, in the direct labor cost, packaging cost, and sales. Next is the semi-variable cost. Semi-variable cost is the semi-cost in the mixed cost. It is basically composed both cost is the fixed cost and the variable components. Costs are fixed or set level of the production and consumption of the become a variable after the production level and exit the depreciation repair. Semi-variable cost examples is the semi-variable cost in utilities, telephone bills, vehicles cost, internet services. Production cost, and the production cost refers to expense the incurred in the production manufacturing the goods and services, period cost, and these costs related to the general operations of the company and expense the period of which they are incurred. Relevant or irrelevant cost is the relevant cost is or irrelevant concept use the decision making. Cost analysis to determine which costs are important and should be considered when making a decision, and those costs can be ignored as do not impact the decision at hand, and relevant costs are those who are to change the managerial decisions, and irrelevant are those who are not affected the decisions. Example, closing down the unprofitability retail shop. Controllable and uncontrollable shop. These costs, which may be directly regulated the given level of management authority, and controllable cost are those costs which are subject to decisions the manager, and the hence we keep the predefined limits. For example, cost of raw material may be controlled by pursuing the large quantities. Non-controllable, these are costs which cannot influence the action and specified members to the enterprise. For example, very difficult to control costs like factory rent, manager salaries. Shutdown cost. During the shutdown period, though no work done, yet the certain fixed costs such as rent, insurance, and building depreciation for the entire plant will have to incurred. Such cost is idle plant is known as shutdown cost. And the shutdown and historical cost. These costs have been and created the decisions and that was made in the past and cannot be changed the any decisions that will made in the future. Investment in plant and machinery building. And different and incremental or discremental cost, the different in the total cost between two alternative in terms of the different cost. In case of the choice of alternative, results in increased total cost. In such increase, the cost is known as incremental cost. In case the choice result in decrease in total cost. Such decrease in total cost in terms of incremental cost. Thank you for the listening me. Thank you.